Starting from scratch with no credit can feel like you're invisible in the financial system. You can't get approved for loans, credit cards, or even a decent apartment sometimes. But the truth is, you can build credit faster than you think if you take the right steps. In this video, I'm going to walk you through a complete beginner's guide to building credit from zero with strategies that actually work in today's world. By the end, you'll know exactly what steps to take, what mistakes to avoid, and how to go from no credit at all to a healthy score that unlocks financial freedom. Before we dive into the how, let's talk about why credit matters so much. Credit is essentially a trust score. Banks, lenders, landlords, and even some employers look at it to decide if you're responsible. With good credit, you'll qualify for lower interest rates on loans, better credit card rewards, easier approval when you apply for an apartment, and in some cases, even cheaper car insurance. Without credit, everything gets more expensive. Borrowing money costs more, and certain opportunities are closed off. That's why building credit is more than just a number. It's about opening doors for your future. So how does credit actually work? Most lenders use something called a FICO score, which ranges from 300 to 850. Your score is based on 5 factors. The biggest one is payment history, which makes up 35% of your score. Do you pay your bills on time? Next is credit utilization at 30%. That's how much of your credit limit you're using. Then there's the length of your credit history at 15%, your credit mix at 10%, and finally new credit, which is also 10%. When you're starting from scratch, the hardest part is that you don't have any history at all. That's where we start building. The first step is to get access to credit. If you have no history, banks usually won't give you a traditional credit card or loan. But there are beginner-friendly options. One is a secured credit card. You put down a deposit, usually $200 to $500, and that becomes your credit limit. It's your money, but the bank reports your payments to the credit bureaus, which build your history. Another option is a credit builder loan, which some banks and credit unions offer. You pay monthly into a locked account, and when it's finished, you get your money back along with a new record of on-time payments. Some people also start with retail store cards because they're easier to qualify for, but you have to be careful with those because the interest rates are very high. Once you have access to credit, the next step is to master your payment history. This is the single most important factor. Even one missed payment can hurt your score for years. The easiest way to stay consistent is to set up automatic payments. Even if you only automate the minimum due, you'll never miss. Then, on top of that, make sure you're paying your full balance each month to avoid interest. Every on-time payment is like casting a vote for your financial trustworthiness, and over time those votes add up. The next step is to keep your balances low. This is where utilization comes in. If your card has a $500 limit, don't spend more than $150 before paying it down. The general rule is to keep your usage below 30%, but if you can keep it under 10%, that's considered excellent. This shows lenders that you don't rely too heavily on credit and that you know how to manage your spending. Here's a powerful shortcut: piggybacking on someone else's good credit. If you have a parent, sibling, or trusted friend with a solid credit history, ask if they can add you as an authorized user on their card. You don't even need to use the card yourself. Their positive history will show up on your report and help build your score. Just remember that this goes both ways. If they miss payments, it affects you too. So only do this with someone who's financially responsible. Over time, you want to diversify. Lenders like to see that you can handle more than one type of account. Start with a credit card, then later on add something like a small personal loan or a credit builder loan. As your profile grows, a healthy mix of accounts will give your score an extra boost. But don't rush this. Focus on getting your first line of credit right before adding more. Now let's clear up some myths that confuse people. A lot of beginners believe you have to carry a balance to build credit. That's false. Paying in full every month is better. Another myth is that checking your own credit score will hurt it. That's also false. When you check your score, it's considered a soft inquiry, and it doesn't affect anything. And here's another one. Using a debit card builds credit. It doesn't. Debit card activity is not reported to credit bureaus, so it does nothing for your score. So what does this look like in practice? Imagine you open a secured card with a $300 deposit. You use it for groceries each month, then pay it off in full and on time. After 6 months, you have positive history. After a year, your score could climb into the mid-600s. At that point, you may qualify for a regular unsecured credit card. From there, your journey continues. After 2 years of consistent payments and low utilization, you could be sitting in the 700s with access to better cards, better loans, and more financial opportunities. The key thing to remember is that building credit isn't about quick tricks. It's about consistent habits. Pay on time, keep balances low, add new accounts slowly, and ignore the myths. If you follow those simple steps, you can go from no credit to a strong score in just a couple of years. If you found this helpful, give this video a thumbs up and subscribe for more smart money tips. And tell me in the comments, where are you right now in your credit journey?